Hey everyone, and welcome. I'm Chase Mayhugh with Mayhugh Commercial Advisors, and I want to thank you for tuning in to our very first podcast episode. The goal here is simple. We're going to keep these conversations practical and grounded, bringing real market insight to property owners, investors, developers, and businesses across Southwest Florida. For this first episode, I'm going to kick things off with a snapshot of the Lee County industrial market, specifically the Fort Myers area, based on our Q4 2025 industrial market report. And the best way to describe the market right now in one word is transition. This market isn't falling apart, but it is clearly shifting gears after several years of rapid development and intense momentum. Here's the big headline. Over the last 12 months, Fort Myers delivered 2.1 million square feet of new industrial space, while absorption came in at 323,000 square feet. That gap between new supply and demand is what pushed vacancy higher. The overall industrial vacancy rate is now 8.7%, which is a noticeable change from the tight market we've been used to. But this is the important part. Vacancy is rising mainly because of new construction hitting the market faster than leasing can absorb it. It's not because tenant demand disappeared. In fact, of the roughly 2.3 million square feet vacant, more than 60% is concentrated in buildings delivered since 2020. So what we're seeing is a market that's digesting a wave of new, mostly speculative industrial product. Now, tenant demand is still healthy, but behavior has shifted. Tenants have more choices, they're taking a little more time, and they're negotiating harder. And one of the stabilizing forces in the market continues to be small bay tenants, the local and regional users that consistently drive leasing activity. Where things get even more interesting is the investment side. Even with vacancy increasing, industrial sales activity in Lee County has been extremely strong. Over the last 12 months, the market recorded $310.4 million in transaction volume across 152 deals. That's nearly 5 times the market's long-term annual average, which tells you a lot about investor confidence here. And it's not just local private buyers either. Fort Myers continues attracting institutional attention, including major trades like Walton Street Capital's $155 million acquisition of Tri-County Commerce Center and EQT Exeter's $87 million purchase of 2 buildings totaling 500,000 square feet at Legacy at Oriole Park. Those kinds of acquisitions matter because they help confirm Fort Myers as an institutional-grade industrial market. And that has a ripple effect on pricing, underwriting, and long-term market visibility. Speaking of pricing, industrial assets averaged about $166 per square foot over the last 12 months, above a benchmark estimate of roughly $150.93 per square foot. We're also seeing a bit more negotiation. Sale to asking is roughly 5.2% below asking, which is a sign of a more balanced market. Now let's talk rents. Even with vacancy rising, rents have stayed resilient. Average asking rents are now about $13.37 per square foot, up 2.4% year over year. And the highest rents are still being achieved in smaller spaces, especially spaces under 25,000 square feet, where many deals are exceeding $14 per square foot. So no, rents haven't collapsed. The market is simply becoming more competitive and more selective. And finally, development. This is the backdrop for everything. Since 2020, Fort Myers has delivered almost 9.7 million square feet of industrial space, roughly a 20% inventory expansion. But here's the key positive moving forward. The pipeline is slowing. Currently, there's about 1.95 million square feet under construction, equal to 5.1% of total inventory, which is nearly a 30% decline from the prior year. Pre-leasing is still around 49%, but fewer new starts should help the market stabilize and lease up what's already been delivered. So the overall takeaway is this. Lee County Industrial is shifting from a high-growth expansion phase into a lease-up phase. Vacancy may remain elevated near term, but the long-term fundamentals, population growth, regional logistics demand, and capital interest, remain very strong. If you're a tenant, this could be one of the best negotiating windows you've had in years. If you're an investor, this is where disciplined underwriting matters and where opportunities can emerge as the market normalizes. I'm Chase Mayhugh, and I really appreciate you tuning into our first episode. If you'd like a deeper breakdown by submarket or want to talk strategy for your specific property, you can always reach out to our team at Mayhugh Commercial Advisors. Thanks again, and we'll see you on the next episode.